Hey everyone, sorry it's been so long on a crypto video, but as I talked about a while ago, there was nothing to report on because we were correcting until May. So I'll just show a snippet of the video that I talked about last time and that we were looking for a correction into this period anyway. I pull, and then as you can see, we're here now, March. So historically, just after March, so mid-March, we start to get a downturn until that kind of April-May period. Then around that halving cycle is where it starts to go ballistic. So 100 years of data is showing us that for the next couple of months, we typically get a correction. Okay, so you can see why I didn't bother, because as we have, that was back here, and we have been correcting that whole period. So a lot of people think you lose money in a bear market. Traders actually lose money in a sideways market because they don't know what's going on. They're going long, they're going short, they're going long, they're going short, and they just get constantly stopped out. So when I know we're going into consolidation, I move my attention to somewhere else that's breaking out and trending. And as you guys know, silver was it for me weeks ago. So why pay attention to crypto when it's going sideways when there's other markets that are actually impulsing and moving out? You've always got to move to where the money is. Best way to think about it is a surfer. Okay, you can be the best surfer in the world and know exactly how to ride each one of these beautiful waves. But if you can't find the great surf spots, it doesn't matter. There's no waves to ride, right? So there's no waves to ride in here. So you find another surf spot where they are. You've got to identify where the key surf spots are, because there are times in seasonality where different spots are better than others. And that's what I was talking about then. Seasonality told us that crypto was terrible during this period. Risk on assets were terrible during this period. So why are you trying to surf the terrible waves? Okay. All right. So let's unpack what's happened now. I'm going to show you the bullish scenario, and then also what we've got to be careful of, what key levels if it was to turn bearish quickly. Okay. So the reason why I was looking into that period as well was a number of reasons. One, it was showing its signals and it was going to retrace down, because as we know, for every push you get a 1/3, 2/3 correction. All right, so we know this area here is an area where bulls are supposed to step in. They have right now, and they have off the fib 382. Which means that this is a very strong trend, normal week. So at the moment, they're stepping in on a strong trend as well, which is a good sign. What you don't want is you don't want to come into the zone, come out, and then come back within again. Because that is what happened up here on the hourly, which is then we started to go down further. Let me show you further. Okay, so you can see here, we were going, we were up, and we had our 1/3, 2/3 tracer, eaten up, all good, taken away. Okay, you can see all of these pushes will get eaten up. Then all of a sudden, you can see that we've got here a push into our zone. Okay, in, eaten up, all good, but then comes back within. Okay, sign of weakness if we go into the golden pocket, come out, and come back within again, because you really want that in, buy, step in straight away. So that's what we've got to look at now on here, and the fact that buyers have stepped in at the fib 302, which means it's a strong trend. So if it's a strong trend, they should get in and then come out. So what we're looking for now is for the buyers to come in and then change market structure. The minute we get above that 67,000, we have an official change of market structure on the daily, 4 hourly, on the larger time frames again. Okay. Right now, there's two things. We've come in and we're looking for that is the bullish case. Okay. I'm going to dive in, show you a bit more. Okay. So right now, we don't know if this is a zig and this is a zag, and we're going to continue the trend, or if this is complete and this is the beginning of something and we're going to go up. So let's look at both levels and understand where the key levels are to understand that. So that was my target zone in the first place, because if that is a zag, this is where they're going to reject. Okay, zig, zag, rejected, fallen away. Okay, so it very well could be a zig and a zag. Okay, however, if it's the other way, if it's actually finalized, then maybe we've actually already completed. And this is where the buyers are stepping in. Zig, zag, and then we go up. Okay, so that's why this level here is a crucial level. I'm going to make that red because it's going to be resistance. Sellers will step in there. But the minute we get above that zone there, we have an official higher high, higher low, and we change market structure. So that is your key level. If you can get a 4-hourly candle close above 66,800, then we are bullish market structure again. Okay. What you're looking for on the smaller time frames is maybe above here, higher high, higher low, higher high. However, that could just be a zag and then a rollover as well. All right. So yes, it'll be good if we get above there, but then it has to get over there to actually change on the larger time frame. Okay. If it's the other way and we're bearish, then we have rejected our zone here. Okay, kind of our resistance. And now we just have lower low, lower high, lower low, lower high, lower low, lower high. At the moment, it's bearish market structure. So what you need to understand right now is if you're long right now, you're counter trend trading because market structure is down. Okay, you can see this was our top. Selling lower, buying lower, buying lower, buying lower, buying lower. Okay, we're still bearish from this point. We only change if we get above here. The only point we're bullish from right now is this point here. We were bullish up to there, but then you can see we've changed market structure again. So we need this one to at least change back before we're bullish again. So at the moment, you're counter trend trading if you're bullish until we get above here. Once you get above there, then we're bullish market structure again. Then you want to go long. But at the moment, it's still bearish market structure. Okay, so wait for the data to tell you that it's flipped. Don't anticipate. Let the data tell you. If we break this low here, then that's a big change in market structure again, because what's going on? We're then maybe not just getting, okay, the bulls might step in here and they might step in anywhere in here. But like I said, it's a sign of weakness when we come in, go out, and then come back within again. And then also that is a big key support level, would be breaking a major support. So if it does break, it has to get back up straight away. If we fall below this 52K, we're in trouble. That is your big, big level. Because as Dow states, if it goes past 2/3 on increase in volume, it might not just be a retracement. It might be the beginning of something, might be the beginning of a new trend down. Then that means that we might not just be correcting this final wave, we might be correcting this whole wave. Or we might be correcting this whole wave, or this whole thing is finalized and we take out the new lows. We don't know yet. And the thing is, you don't have to know. You just need to know that when market structure is bearish, you're not long in your trading swing account. I've still got my long-term positions open because I look at the bigger time frames for them. But right now, my trading account is cashed up. My swing account is cashed up. And until I get a change of direction again, it will remain that way because I don't add stuff into my swing account when the trend is down. Okay, so you've got to really understand the key pivot points, the key market structure, and know when it flips from bullish to bearish. Yes, there's a good chance the correction is finalized and it's done because there's a lot of confluency at this point here. Like I showed you, it's the Fib 382. Okay, it's also the Fib 1-to-1 from the ABC if it's complete as well, 1-to-1. So it's a cluster point of confluency right there. Okay, which again, extremely strong support level, which the buyers have been stepping in here for the last 1, 2, 3, 4 times, 5 times since pretty much the whole of 2024. If buyers have been stepping in there and all of a sudden they're not, why? Why all of a sudden were they buying higher, selling higher, buying higher, buying higher, selling higher, selling higher, buying higher, selling higher, selling higher, buying equal, but now they're selling lower. Why all of a sudden are they selling lower? They were selling at 73 3.5 last time. Why are they selling now at 72, 71? Why are they now selling at 66? Why aren't they buying off this zone? You can see where it starts to flip. Okay, so if we lose that level, watch out. We could be getting a much, much larger correction, and just wait for the change of structure. Once it goes down and it comes back up and you've got bullish market structure back on your side again, you can go long. But this is why you don't just buy the dip. That's what I said up here. What if you're buying the dip? What if it's a bigger dip than you think? Okay. And it has been. Everyone thought it was just going to be one of these tiny dips, but it hasn't. It's been a bigger dip. So don't rush it. Wait for the data to tell you that everything's all right, and then you can go. And if you look at the inverse relationship, USDT dominance, it's doing the same thing. Okay, it has bullish market structure off a key major zone, which is what I talked about. We're on key major support right here, all the way back, key support, and then it was very oversold, and then it had bullish divergence coming down into it. Okay, so it was obviously going to bounce in. This is what I said, defense. You've got to know when it's time to play offense and when it's time to play defense. Because what a lot of people do wrong with crypto is they don't realize it's friggin' easy to make money. It's friggin' hard to keep it. Okay, super easy. They make it seem so easy. Oh my God, it's so easy. Money's rolling in, bull market. Next minute, everything's down 57% and you're actually down lower than when you bought it. That's how crypto works. You got to know when to get out, when to play defense as well. Okay, so market structure here. Higher high, higher low, higher high, higher low, higher high, higher low. At the moment, it's bullish, but it could reject here. If it gets above this 5.5%, we're in for a bigger drop in crypto, because then you're getting through the 618, you're getting through that major support that should be resistance, and that means that this is probably not a zig and a zag and then continue. It's probably actually a major bottom. All right, so this is again why I'm not mucking around, because if we do break these levels, I'm not going to be caught holding bags like majority of the crypto hodlers, because they're programmed into thinking we're in some 4-year cycle and that crypto will go up every halving cycle because of it. When everyone's following the same roadmap, it scares the shit out of me. And I know from experience that it's not that easy to make money in markets. And when it is easy to make money in markets, it's really hard to keep it. So everyone's following the same roadmap doesn't mean that it might not keep going. It just means that I wouldn't be following the roadmap of that we're going to go through to the end of 2025, because that's what everyone's following, the normal 4-year cycle. So at the end of the day, you don't have to worry about it, because the charts will tell you when they change market structure. When this flips back, if this was to take out here, then all of a sudden we've changed market structure, we're going back for a major level, it's good for Bitcoin. If these key levels break, I'll do an updated video to let you know. But in the meantime, like I've been saying over and over and over again, just play defense, be careful. There's nothing wrong with sitting in cash in your trading account until you get further clarification. Okay, and this is the thing that, as you guys know, I've been bearish on this whole move really on Bitcoin. However, I've probably made more money than the majority of the bulls, because when have I been bullish? Look back on all my posts. I went bullish here to here on crypto. I got that massive alt run. I then, as you know from my YouTube video, bought the bottom of my alts here in June. Then I was bullish up until the Bitcoin ETF. So I got that whole run. Then after that, I went bullish for that run up until the recent top. So I've got that move, and that move on all of the altcoins. Dodged that. And a lot of the altcoins during that period actually made new lows. Okay, so you can still make money even if you're expecting something dramatically to happen. This is why it's good to trade the data. And this is what a lot of people struggle with, is that they get fixated on their, that it should be bullish or it should be bearish. You don't need to, just follow the data. As you guys know, I was bearish on Bitcoin throughout all of 2023, saying this is a fake rally, likely a B wave, but that didn't stop me making shitload of money during these impulses here during that period. As you guys know, look back on the charts. All right, guys, hope that helps. And like I said, if it does majorly change to the upside and break some of those key levels, I will let you know. If it breaks below that 60K, be careful. Take care, everyone.